So we have purchased assets, determining the cost and what to book. We have used assets and depreciated these assets using 3 different methods: straight line, double declining, and units of activity. And now it's time to sell them. We had spoken earlier about gains and losses a little bit, right? Based on what the book value was when I sold an asset. But right now I'd like to actually look at calculating gains and losses again and look at a problem that has multiple questions associated with it, just like my test. So let's look at number 11. It appears that on January 1st, year 1, I purchased a machine that cost $17,000. It has a useful life, 3 years, and it is using straight line depreciation, and it has a salvage value of $2,000. So A says, using straight line depreciation, depreciate this asset, calculate the accumulated depreciation and book value over the life of the asset. So we know that annual straight line depreciation is cost minus salvage value over useful life. So this one's easy. 17,000 minus 2,000 divided by 3 years, $5,000 a year. So if we were doing our chart, depreciation, accumulated depreciation, book value, and of course you remember book value is cost minus accumulated depreciation. In year 1, 2, and 3, straight line, gotta love it, right? $5,000 a year. The accumulated depreciation, $5,000 in year 1, $10,000 in year 2, $15,000 in year 3. Book value, I paid $17,000, we've depreciated it at $5,000. I have a book value of $12,000 at the end of year 1. 17 minus 10 will give me 7. 17 minus 15 will give me 2. And we know always at the end of the useful life, book value better equal salvage value. And it does. So that said, let's sell this asset 50,000 ways. So assumption B says, sell this asset for $10,000 at the end of year 1. Calculate the gain or loss on the sale and prepare the journal entries from purchase to sale. Okay, so here we go. At the end of year 1, book value is $12,000, and I sold it for $10,000. So it's on my books for 12, I sell it for 10. Do we have a gain or a loss? A loss, right? Loss of 2,000. So let's think about all journal entries from inception to sale. So on January 1, year 1, I put machine on the books. It's an asset increasing, I debited it, $17,000, and I credited cash. For depreciation, at December 31st, year 1, I debited depreciation expense, credited accumulated depreciation, $5,000. And I did that for years 2, 3, if I had kept it that long. But I didn't. I sold it at the end of year 1. So at this point, I have a machine on my books. We debited machine $17,000. I've got accumulated depreciation on my books, $5,000. And I'm selling this asset. So I need to take the asset and its accumulated depreciation off the books. Plus, you told me that we're going to have a $2,000 loss. So for us, losses are debits. Gains are credits. So let's think about this entry. Somebody just gave me $10,000 When they give me $10,000, I will debit cash $10,000. I need to take accumulated depreciation off the books. It has a credit balance. If I want it to go to zero, I need to debit it. So I'm going to debit accumulated depreciation, $5,000. You told me we have a loss of $2,000. Losses are debits. And then I've got this machine, and it needs to come off the books too. It has a debit balance of $17,000. To make it disappear, I need to credit it $17,000. Notice that our debits equal our credits. That's very important for us to check, because sometimes in these entries we get a little confused. So notice, right, I've got $17,000 of debits, $17,000 of credits. When I post this, machine goes to zero. When I post this, accumulated depreciation goes to zero. And now we have sold it at the end of year one with a loss. But C, that was B. C says, oh wait, no, you didn't sell it at the end of year one. You sold it at the end of year two for $8,000. So now we're going to make this assumption disappear. And now I'm going to sell it here for $8,000. So if I sell this asset at the end of year two, when it is on our books for $7,000 and I sell it for $8,000, do you agree that we've had a gain of $1,000? So if that's the case, it says, prepare the journal entries from the inception of time until we sell it. So we can do that. See, I have a whiteboard. I can do that a lot easier than you. Okay. So, January 1, bought the machine. December 31st, year one, I depreciated it. But now I've held this machine for 2 years. So in year two, I make this same entry. So let's post these. I have a $17,000 debit to machine. But now I have credited accumulated depreciation twice over the years. And it now has a $10,000 balance. We decided that I have a gain, right? Losses are debits, right? Gains are credits. And the credit is the $1,000, the difference between what it's on my books for and what I sold it for. So when I go to record this entry, somebody gave me cash. So I'm going to debit cash. I want to debit $8,000 in cash. Accumulated depreciation has a credit balance. So to make it disappear, I'm going to debit it. And when I do that, this goes to zero. Then we said gains are credits. The gain is $1,000. And this machine, I need to take it off my books. And when I post this here, this goes to zero. Notice, dollars of debits, 18. Dollars of credits, 18. Your debits have to equal your credits. Okay. Now we're ready. Okay, let's turn the page. Let's look at D. So it says, nah, you didn't sell it at the end of year two either. Okay. It says, actually, you're going to sell it at the end of year three for $2,100. Again, prepare all the journal entries from inception of purchase to sale. Okay. So now this is gone, right? And now I'm here. This is book value, and I'm going to sell it for $2,100. Gain or loss? It's a gain. I need you to hit pause on this video. I want you to tell me the journal entry that we need to make this sale. And when you're done, I want you to come back on. Come on, pause it. Go get your coffee, come back with your calculator, and let's do this. Okay. you're back. I'm trying to debate whether you actually have an answer. If you even hit pause, that's okay. We'll do this together. Let's erase the answer from last time. And again, here's machine, $17,000 debit for my first entry. But now I've actually had this machine 3 years. So I depreciated at $15,000 in year 1, 2, and 3. So when I look at accumulated depreciation, we've got 5,000, 5,000, 5,000, right? It has a balance of 15,000. So when I go to sell this asset, I'm going to get cash of $2,100. I need to take accumulated depreciation off of my books. If it has a credit balance of 15, I better debit it 15 to make it 0. Then we've had a gain of $100, and then I need to take machine off of the books to 0, 17,000. So I've got accumulated depreciation off the books, I've got machine off the books, I have $17,100 of debits, $17,100 of credits. We've got this, right? Do me a favor, skip over the next one for a moment. We'll come back to it, but I want to go to the last one first, and let's do F. It says, assume that the machine is thrown away at the end of year 3. Calculate the gain or loss on the sale and prepare the journal entries from purchase to disposal. So in this case, I couldn't sell it. Right? Maybe it blew up. Who knows? But I didn't sell it. So in essence, when I just throw it away, that's the equivalent of selling it for $0. So in this situation, I got to the end of the useful life. It's sitting at $2,000 on my books, and I got 0 for it. Do I have a gain or a loss? I have a loss of $2,000. Now looking at my entries, I still bought it. I still depreciated it for 3 entire years. So currently, before I actually sell it, I've got a $15,000 balance and accumulated depreciation, and $17,000 in machinery. So I sold it for 0, so I don't want to necessarily debit cash for 0. But I do know that I need to take accumulated depreciation off the books. So I want to debit at $15,000. You told me we had a loss of $2,000, and losses are debits. And then I want to credit machine $17,000. And when I do that and post here, and post this here, both of these accounts go to 0. My dollars of debit, $17,000, equal my dollars of credits. Life is good. Okay. But now, let's backtrack a minute. Let's go to E. E was a little bit different because we sold it not at the end of any given year. Before I can sell an asset, its accumulated depreciation must be up to date. Okay. So this example says, assume that the machine is sold in the middle of year 3, in essence, July 1, year 3, for $3,000. Calculate the gain or loss on the sale and prepare the journal entries from purchase to sale. Okay. So we need to revamp this a little because this is not going to make it all the years. So somewhere between year 2 and year 3, I'm going to sell this asset. Okay. And I need to make sure that depreciation is up to date at this time. So year 3 doesn't ever happen. I don't get to keep it to year 3. But I do need to depreciate it. So I depreciated $5,000 in year 1, $5,000 in year 2. So I like this entry for my purchase, this entry for the first 2 years of depreciation. But when I come in here, because this was December 31st, year 2. Right? Now they're saying we sold it July 1, year 3. 6 months later. If we remember, July is the middle of the year. So I get a half year's depreciation on this asset. So in July 3rd, year 3, July 1, year 3, sorry, I'm going to get half of a year's depreciation, $2,500, which will bring this to $12,500. And when I subtract that from the original $17,000, I'm going to be left with $4,500. This being book value on July 1, right, year 3. And I sold this asset according to our papers for $3,000. So if it's on my books for $4,500 and I sell it for $3,000, we have a loss. Okay. But I've calculated this depreciation, but I haven't made an entry for it. So here, I come up here and it's July 1, year 3. I'm going to debit depreciation expense, credit accumulated depreciation for the $2,500 first. And at that point, let's look at our T accounts. I've got machinery, $17,000. I've got accumulated depreciation, right, $5,000, $5,000, $2,500, or $12,500. We got cash of $3,000, so I would debit cash $3,000. If we have a loss, losses are debits, the loss is $1,500. I need to take this $12,500 off of the books, my accumulated depreciation, and then I'm going to take machine off of the books, $17,000. So when I post this, it goes to 0. When I post this, it goes to 0. And life is good. So we can buy them, we can depreciate them, and we can sell them. Okay. So, do we want a tricky one? Yeah, we do. Okay. Let's look at number 12. We were really lucky, right, this time. Really lucky. I purchased it on January 1st, and I used straight line. But, into our life, some double declining must happen, because I like double declining. And what do we remember about double declining? We remember, hopefully, that A, I know you don't like it. B, it can be tricky. And C, if it could be tricky, I'll make it tricky. So, here we go. Be happy that we bought and sold it at the beginning and the end of a year. So this is selected problem 12. And on January 1st, year 1, we purchased a machine. Imagine that. With a cost of $12,000. And then it has a salvage value, $3,000, a useful life of 3 years, and look at this. We use double declining depreciation. And we sold this machine for $1,800 at the end of year 2. And what I want to know are what are all the journal entries we need from the day we bought it to the day we sold it. So let's think about this. We kept it all year, so thank goodness I don't have to do prorated. Let's look at depreciation for double declining. We know that it is book value times 2 over useful life. The 2 being what the double in double declining stands for. So let's look at depreciation, accumulated depreciation, book value. Let's go into year 1. Year 1, there is no accumulated depreciation. Book value equals cost minus accumulated depreciation. So I've got $12,000 minus nothing. So I've got $12,000 book value, and then I want to multiply by 2 over 3. And I should probably put this for to work. So if I take 12,000 times 2 and divide by 3, I get $8,000. And be careful. This is one of those we always got to be checking out max. Maximum amount that I can depreciate is $9,000. And I get $8,000 in the first year. So I can take $8,000. I'm all about that. So this is year one. We're going to depreciate this asset $8,000. That is going to be my accumulated depreciation. Book value is $4,000. We come into year two. Formula says you take book value, which is now $4,000, and multiply it by 2 over useful life. And when I take 2 divided by 3 and multiply by 4,000, this gives me, rounding, 2,667. Can I take this amount of depreciation? Nah. These are the ones I love to ask, by the way. No, because the maximum I can do is 9,000. 2,000 plus 8,000, more than 9,000. So we reject. And in year two, I will take 1,000. Because the 8,000 and the 1,000 will give me my max. So I take 8,000, 1,000, this gives me 9,000. Book value is now $3,000. And it says we sold it for $1,800. Therefore, do we agree we have a loss of $1,200? Yep. Okay. So it says all journal entries. January 1, year 1. We put this machine on our books, spent cash. It appears $12,000. December 31st, year 1, we debited depreciation expense, credited accumulated depreciation, $8,000. That is not the amount that I did in the second year, so I do need to make a different entry. So I will debit depreciation expense, credit accumulated depreciation now for the $1,000. Let's look at our accounts. In machine, I've got $12,000 debit. And in accumulated depreciation, I have $8,000 year 1, $1,000 year 2, $9,000 total. And we said if it has a book value of $3,000, I sell it for $8,000, I'm going to have a loss. I'm also going to run out of board, but that's okay. Squint your eyes, we can do this. So I'm going to debit cash for the sale, $1,800. No, yeah. I'm going to debit loss, $1,200. I'm going to debit accumulated depreciation, the $9,000. And credit cash, no. How about credit machinery? $12,000. And when I post this, I've got the credit to machine. I've got this. 0. We can do this. Okay. For right now, let's take a break, and then when we come back, I want to look at a ratio, and I want to look at natural resources and deplete them. After that, I want to look at intangible assets. In fact, I think we're going to do all 3 of these together in our next video. How exciting. Okay, I will see you back in just a little bit.